Good afternoon, everyone. Welcome and thank you for joining us for the Nonprofit Overtime webinar, What Nonprofits Need to Know and Do About the Overtime Final Rule. We appreciate you all joining us today, this election day. And for those of you in states and localities with elections today, we hope you've taken the time to go out and vote. Just a few housekeeping items before we get started. Your lines will be muted throughout this entire session. We have about 1,800 people registered for this, so that's why we're keeping background noise to a minimum. We thank anybody who sent in questions beforehand. We're trying to work those into the presentation where we can. For those with questions throughout, please send them in via the Q&A chat box. We'll try to work in as many answers as possible during the session, but please understand with 1,800 folks on the line, we may not be able to get to every single question. And to the big question we know many of you have, yes, we will be recording this webinar and we will be posting that recording for all of you to view later on in case you miss anything along the way. So with that, I want to again thank everybody and turn things over to David Thompson.
Welcome, everyone. We start by thanking our webinar sponsor, Zoom, who is making this program free for all to attend. We very much appreciate Zoom's support of the nonprofit community. I'm David Thompson, Vice President of Public Policy for the National Council of Nonprofits. I wish you all good afternoon, good morning, and aloha. Charitable nonprofits operate in every state. Indeed, we operate in every county of the country. I believe we have people joining us from every state on this call, this webinar right now. And that's important because the federal and state laws we're talking about today apply to just about every nonprofit employee and employer. We're going to be going quickly through a great deal of material today. So I want to flag for you this slide to show you how to plug into this network and stay up to date. I get most of my information through our state associations of nonprofits, so that's a great place to start. You can also keep track of things through our Twitter feed, as well as subscribing to our two newsletters, Nonprofit Advocacy Matters and Nonprofit Knowledge Matters. Today we're covering a lot of material. As I said, we're covering the big questions: why, who, what, and how. But before we get into the material, I want to introduce our presenters. Going clockwise, we have Derek Witherspoon, who's Director of the Division of the Fair Labor Standards Act and Child Labor within the Wage and Hour Department, or Division of the Labor Department. Derek is a fine official with the Department of Labor. He hails from Arkansas originally. We think that's important since you're nationwide. We thought we should represent that we are, all of us on the call, come from other places as well. Joining him in explaining the overtime final rule is Serena Bazile Cox, who hails from California. She is Senior Advisor in the FLSA Child Labor Division. Derek and Serena are actually getting quite famous for making sense, translating the bureaucratic language of the regulation into real people speak. We're privileged and honored to have them on the program. We also have, continuing to go clockwise, Jennifer Przemski. She's going to speak later in the presentation. She's a Virginia-based partner with the National Labor and Employment Law firm Venable. Jennifer and Venable do excellent work with and for the nonprofit community. First up after me is Kathy Ruckelshaus. She is Legal Director and General Counsel for the National Employment Law Project. They are a national advocacy organization with deep knowledge and experience in protecting and promoting employee rights. Thank you all for joining us. So I promised the big questions. First one is, why an overtime webinar specifically just for charitable nonprofits? Well, one reason is that nonprofit employees make up 10% of the private workforce. The Department of Labor says that the new overtime rule will directly affect about 7% of nonprofit workers. That impact is greater than the rule will have on for-profit employees. So we're unique in that regard. But there's a more fundamental reason as to why a specific program for nonprofits. Charitable nonprofits are different, as you all know, are different from government employers and for-profit businesses. We look at labor policies differently. our colleague Liz Moore of the Montana Nonprofit Association observed back when the overtime rulemaking started, way back when, that nonprofit folks tend to look at labor standards questions from a perspective of moral support and operational anxiety. We ask, what's the right thing to do? And then, how are we going to pay for it? Those two questions, the dual sensitivity, explains why an overtime webinar exclusively for charitable nonprofits makes sense. Now, we're committed to full and honorable compliance with the federal and state laws. As we proceed today, our ask to all participants is that you not just focus on what minimum adjustments, if any, you may need to make because of this rule. Instead, we ask that you take the opportunity presented by this new overtime rule to look at your work distribution, to talk to your colleagues and coworkers, and to talk to your funders, all with the goal of promoting full compliance. Next big question, who's covered? What's the context of this law? Kathy Ruckelshaus of the National Employment Law Project, would you please get us all on the same page on this long-standing law called the Fair Labor Standards Act?
Sure. Thanks for that context. And the Fair Labor Standards Act is a federal law. It's from 1938, and it basically says that covered employees have to be paid at least the federal minimum wage for each hour worked. Also, that employees have to be paid time and a half, their regular rate of pay, in any work week in which they work over 40. So that's the overtime rule. And any employer claiming that their employees don't get overtime or minimum wage has the burden to prove that that exemption applies. So the overtime basics are, and you'll hear a lot more about this, but this is just kind of the basics that we're going to talk about today. Again, most employees have to receive overtime unless they are otherwise exempt, and the burden is on the employer, meaning you, to prove that there's an exemption. The reason we even have overtime, and this again comes from the 1930s, is that the idea of an employer having to pay a premium for overtime, time and a half, is that it would encourage the employer to either hire another worker to do that work so you don't overwork your employees and make them work 60 hours a week when two people could do the job. But it is also to avoid abuse and overwork of workers. So non-exempt employees, which means covered employees, have to receive overtime after 40 hours in a work week. You have to get paid time and a half your regular rate of pay. So if you get paid more than the minimum wage, say you get paid $10 an hour, you have to get time and a half $10, not time and a half the minimum wage. And then if an employer knows or should know that a worker is working overtime, they have to pay that time and a half, even if the worker didn't authorize the overtime. Now, is this still me?
Yes.
Okay. All right. So who is covered? Enterprises are covered. So you have to have more than $500,000 in annual revenues from interstate commerce. When that was passed, that was intended to basically not cover some of the smaller employers. Today, those annual revenue amounts are pretty low, so most employers are covered. But you have to be doing interstate commerce work. And state law could make coverage automatic, and we'll be talking about that throughout this presentation. Your state laws, if they're more protective for workers, you have to comply with those, because whatever's most protective is what rules for your coverage. So enterprises with $500,000 or more in annual revenues, and individuals can be covered. So even if you're working at an enterprise that is smaller than $500,000 a year in annual revenues, individual workers can be covered if their work regularly involves interstate commerce kind of work, and that can include things like swiping credit cards for contributions, or driving people across state lines if you're in a densely populated area, or handling instrumentalities or things that have passed in interstate commerce. So you can get a lot of individuals covered even if the enterprise isn't covered. Now we have really almost every employer and employee is covered by the FLSA, by the Fair Labor Standards Act. And under state laws, as I mentioned earlier, there's even more broad coverage. They typically don't have the interstate commerce requirement because it's within the state, and they cover most employers with some exceptions that we'll talk about later. So you should assume that you're covered unless you get advice from somebody that your enterprise or organization or workers are not covered.
Kathy, one more quick item.
Sure.
Still you.
Yes. So the way that the overtime coverage works is, and this is what we're talking about today, is the Fair Labor Standards Act has several exemptions from overtime and minimum wage. The ones we're talking about today are executive, administrative, and professional employee exemptions. Those are often called the white collar exemptions because that's what they were when they were first passed. They were intended to cover quote unquote white collar workers who executive, administrative, and professional that had the discretion to manage their jobs and the time on their jobs. So to be able to meet, for an employer to show that a worker is exempt as either an executive, administrative, or professional employee, the employer has to show that the worker's paid on a salary basis, that the workers paid a salary at least at the minimum salary threshold, which we'll talk about in a minute, and that the primary duties are what would be falling under administrative, professional, or executive definitions that we'll go over. So there's three pieces that employers have to meet in order to call their worker exempt from minimum wage and overtime.
Thank you so much. Salary alone is never enough. That's why we go into, that's why the test matters. I'm now going to turn it over, there we go, to our friends with the Department of Labor to talk about the overtime final rule. Derek and Serena, before you dive into your slides, I'd like to ask, is there anything you'd like to add to Kathy's overview and discussion of coverage?
First of all, Kathy, thank you so much. It was actually nice to hear about our particular provisions and how it's understood by others, so that was a very good job with providing coverage from an enterprise and individual basis. Definitely appreciate it, as well as the overview for FLSA and overtime. At this moment, I don't believe there's anything for us to actually clarify. I thought that it was done very well, and we can, continue with the presentation, and towards the end, if there are other questions that were not as understood, we can review those at that particular time. And at this moment, we can just start talking a little bit more about the final rule as it relates to the particular changes, and we are definitely grateful to have an opportunity to speak in that particular space related to the changes. Just as a high level, the changes itself will begin effective on January 1st, 2020. And from that particular opportunity, we'll just walk through how today's webinar should be provided and for the regulated community and others to understand how it actually applies. And just keeping in mind what actually is happening with the webinar today. So for example, our topics today will actually address the executive, administrative, professional employees exemption. We will provide an overview of the final rule itself. Changes to Part 541, including the standard salary level, the highly compensated employee, annual compensation level, the special salary levels for U.S. territories, the inclusion of non-discretionary bonuses, and finally, we will discuss the areas that were not changed in the final rule. During today's webinar presentation, we will also address, as you've mentioned before, any questions towards the end of the presentation. As it relates to the executive, administrative, and professional exemptions, there are a number of exemptions and exceptions from the minimum wage and overtime standards of the FLSA. And the final rule only updates the most commonly called 541 or the EAP exemptions, and the other exemptions and exceptions are unchanged. The most commonly used FLSA 13A1 exemptions are often called EAP exemptions or exceptions from the minimum wage and overtime bona fide executive, administrative, and professional employees. There are 3 tests that must be met for the exemption to apply and remain in place under the final rule. The employee must be paid on a salary basis of a minimum salary and meet the duties test. The department finalized overtime regulations in May 2016 to be effective December 1st, 2016. The final rule was challenged in court, and on November 22nd, 2016, the U.S. District Court for the Eastern District of Texas enjoined the department from implementing and enforcing the rule. On August 31st, 2017, the court granted summary judgment against the department, invalidating the 2016 final rule, and appealed of the decision to the United States Courts of Appeal for the Fifth Circuit. Based on the salary threshold, currently the department is enforcing the regulations in effect on November 30th, 2016, including the $455 per week standard salary level, which is the same level set in place during the 2004 final rule. In July 2017, DOL issued a request for information seeking public input as a part of issuing a new notice of proposed rulemaking. In September and October of 2017, the department held 5 listening sessions, 1 in each of its regions and in Washington, D.C. Public input from the RFI comments as well as the listening sessions were used to draft the NPRM. In March 2019, the NPRM was published with a 60-day comment period. Approximately 116,000 comments were received from a broad array of commenters. The department reviewed the comments received in drafting the final rule that was published by September 27, 2019, with an effective date of January 1, 2020, which was formally rescinded in 2016 final rule. And now Serena will actually go over, take the presentation further, dealing with the changes of the new overtime rule. Serena?
Thanks, Derek. So this portion of the presentation is going to explain the changes in the new Part 541 final rule. The final rule updates the standard salary level and the total annual compensation levels, which are required for the exemption of highly compensated employees. It also allows employers to count non-discretionary bonuses, including commissions, to satisfy a portion of the standard salary level, but not the highly compensated employee's total annual compensation level. And finally, the final rule provides special salary levels for the U.S. territories, and also allows employers to count non-discretionary bonuses, including commissions, to satisfy a portion of those special salary levels as well. So under the new rule, and beginning January 1st of 2020, bona fide exempt 541 employees who are currently required to be paid on a salary basis a minimum of $455 per week must be compensated on a salary basis at not less than $684 per week. This is based on the 20th percentile of weekly earnings of full-time salary workers in the lowest census region, which is the South, and or the retail sector nationwide. The highly compensated employee total annual compensation level which the department currently is enforcing at $100,000 per year, is going to be increased to $107,432 annually, and this is based on the annualized earnings of the 80th percentile of full-time salaried workers nationally. Now, if employed in American Samoa by employers that are other than the federal government, this current special salary requirement of $380 per week will remain the same. The department is also setting a special salary level of $455 per week for Puerto Rico, the U.S. Virgin Islands, Guam, and the Commonwealth of the Northern Mariana Islands. And last, the motion picture producing industry base rate has been increased from $695 to $1,043 per week. So as previously stated, bona fide exempt employees must be compensated on a salary basis at a rate per week of not less than $684. So this slide is indicating the salary amounts based on the $684 per week in the three most common pay cycles. So again, if employed in Puerto Rico, the U.S. Virgin Islands, Guam, or the Commonwealth of the Northern Mariana Islands, these amounts are adjusted to reflect that the minimum salary level is $455 per week. And if employed in American Samoa by employers other than the federal government, these amounts are also adjusted to reflect that the minimum salary level is still $380 per week. All right, so there are two different types of bonuses: discretionary and non-discretionary. Discretionary bonuses are generally paid without prior contracts or promise or announcement, and the decision to make that payment and the payment amount is at the employer's sole discretion. An example would be like an on-the-spot award, or like an unannounced year-end Christmas bonus. Discretionary bonuses can be paid to exempt EAP employees, but cannot be used to satisfy any portion of the standard salary level. Non-discretionary bonuses, commissions, and incentive payment forms are also forms of compensation promised in advance to employees, but typically to induce them to work more efficiently or to remain with the company. They can be in the form of individual or group production bonuses, retention bonuses, and bonuses for quality or accuracy of work. Commission payments based on a fixed formula are also non-discretionary. Under the new rule, non-discretionary bonuses, incentives, and commissions paid annually or more frequently can be used to satisfy up to 10% of the standard salary level and the special salary levels applicable to the U.S. territories as well. Please note that $615.60 is the minimum amount that an exempt employee must receive as a weekly salary, and any bonus, commission, for example, used to satisfy the remaining 10% must be paid no less frequently than on an annual basis. Under the new rule also, if by the last pay period of the year, the sum of the employee's weekly salary plus the non-discretionary bonuses, commissions, and or incentive payments received does not equal the weekly salary amount of $684, the employer may make one final catch-up payment sufficient to achieve the required level no later than the next pay period after the end of the 52-week period. If the employer does not make a catch-up payment, the employee would be due overtime payments for any overtime hours worked during the 52-week period. An employer has one pay period to make up for the shortfall. And please note, the 52-week period or that 12-month period is chosen by the employer and can be based on an anniversary date, a fiscal year, or a calendar year, for example. So this slide contains payment information for a 52-week period in 2020 that will enable us to walk through the application of the new rule. The work week is Thursday through Wednesday, and the 52-week period begins on January 2nd of 2020 and concludes on December 30th, 2020. The employer guarantees payment of $616 per week, which is approximately 90% of the standard salary level, and issues bonuses on a semi-annual basis. Now, in the first half of the year, the employee was paid a non-discretionary bonus of $1,300, and in the last half, the bonus was received for $2,500, which totals $3,800. The total amount received for the 52-week period in salary was $32,032, which causes a shortfall of $3,536 from the annual standard salary of $35,568 to be received. However, the total of the non-discretionary bonuses received within the 52-week period exceeded the $3,536 shortfall. Therefore, the employee meets the required salary level for the 52-week period. This same principle will be applied regardless of whether such non-discretionary bonuses was paid on a monthly, quarterly, or yearly basis.
Are we ready for the second example?
Actually, I need you to go back one. Thank you. So this is a breakdown of the math for the previous slide. And under the minimum salary level is the heading of what is required. And under the employer paid heading is the $616, which is approximately 90% of the standard salary level, multiplied by the 52 work weeks, which totals the $32,032. Adding the two bonuses of the $1,300 and the $2,500 to the weekly amount paid equals the $35,832, which, as you can see, exceeds the minimum amount of the $35,568 per year. So in this second example, we're going to use the same work week of Thursday through Wednesday and the same 52-week period and the same weekly salary amount of $616 per week, which is, again, approximately 90% of the standard salary level. However, the employee's bonus in the second half of the year is only $2,000. As in the previous example, the employee was paid a non-discretionary bonus of $1,300 in the first half of the year, so the total received is $3,300. The total amount received for the 52-week period in salary was $32,032, causing a shortfall of the $3,536 from the annual standard salary of the $35,568, which is to be received. However, the total of the non-discretionary bonuses received within the 52-week period did not meet the $3,536 shortfall. Therefore, the employee did not meet the required salary level for the 52-week period. However, the employer would have one pay period to make a catch-up payment of at least $236 in order to meet the required standard salary level for the 52-week period. If that payment is not received, the employer would be responsible for the additional payment of any overtime hours worked in the preceding 52-week period, unless some other exemption is applicable. Once again, this same principle will be applied regardless of whether such non-discretionary bonus is paid on a monthly, quarterly, or yearly basis. And again, here we have a breakdown of the math for example 2. And under the minimum salary level heading is what is required. And under the employer paid heading is the $616, again, which is approximately 90% of the standard salary level, multiplied by 52 work weeks, which totals $32,032. Adding the two bonuses of $1,300 and $2,000 to the weekly amount paid equals $35,332, which is $236 short of the $35,568 per year required. Again, if the employer makes a catch-up payment in the amount of $236 or more in the next pay period, the employee will meet the standard salary level part of the criteria. However, if the employer does not make the additional payment, the employer would be responsible for the additional payment of any overtime hours worked in the preceding 52-week period. So highly compensated employees must still receive, at minimum, the full standard salary level on a weekly basis without regard to the payment of non-discretionary bonuses, commissions, and incentive payments. This has not changed. While the full standard salary level must be paid on a salary basis, the remainder of the total annual compensation requirement may still be made up of the non-discretionary bonuses, commissions, and incentive payments. This also has not changed. The only change that was made to the highly compensated employee exemption is the increase in the total annual compensation level from $100,000 to $107,432 per year. Highly compensated employees must still receive at least the full standard salary level amount, which effective January 1st of 2020 will be $684 per week. They may not be paid 90% of this level. That change is only applicable to the standard 541 exemptions as described in 541.100 through 400. To meet the salary basis test, an employee must regularly receive a predetermined amount of compensation each pay period, and that compensation cannot be reduced because of variations in the quality or quantity of work, although the employee doesn't have to be paid for weeks in which no work is performed. In general, the salary basis test requires that the employees must be paid the full salary for any week in which the employee performs any work. However, as previously discussed, the new rule allows up to 10% of the standard salary level requirement to be satisfied by the payment of non-discretionary bonuses paid on an annual or more frequent basis. For employers who choose this option, the employee must be paid at least 90% of the standard salary level for any week in which the employee performs work, provided that the additional 10% owed is made up by the payment of non-discretionary bonuses or incentive payments, including commissions, paid on an annual or more frequent basis. As you know, employees that are exempt under the administrative and professional exemptions may be paid on a fee basis. The final rule did not make any changes to the fee basis requirement, and when we refer to the payment on a salary basis, we also include fee basis payment. So now I'm going to turn it back over to Derek, who's going to provide you with an overview of parts of the 5-4 rule that did not change.
Thank you, Serena. I will ensure to go over this part of the presentation fairly quickly so we can get to your questions that you have. As a reminder, this section will be on the part of the rule of the final rule that did not change. As a refresher, employers may not make deductions from bona fide salaried employees for absences that are caused by business-related matters beyond their control. If the employee is able to work, deductions may not be made for time when work is available. The final rule did not make any changes to these exceptions. An employer may continue to make deductions from an exempt worker's salary due to an absence from work for more than one full days for the following 7 exceptions. Number 1, personal reasons other than sickness or disability. Number 2, due to sickness or disability if deductions are made under a bona fide plan, policy, or practice of providing wage replacement benefits for these types of absences. Number 3, to offset any amounts received as payment for jury duty, witness fees, or temporary military leave. Number 4, as penalties imposed in good faith for violating safety rules of major significance. Number 5, due to unpaid disciplinary suspensions of 1 or more full days imposed in good faith for violations of workplace conduct rules. Number 6, during the first and last weeks of employment when a proportionate part of an employee's full salary may be paid for time actually worked. And finally, number 7, due to unpaid leave taken pursuant to Family Medical Leave Act. As with the current rule, the salary level and salary basis requirement discussed in this presentation do not apply to outside sales employees, licensed or certified doctors, lawyers, or teachers. Employees who meet the duties test for these occupations are exempt regardless of their salary. In addition, as you all already may know, Section 13A17 of the FLSA exempts certain hourly paid computer-related employees who do not meet the salary basis or salary level test, provided that they are paid at least $27.63 per hour. As the presentation actually states, the new rule does not impose any changes to the duties test. Although we asked questions in the request for information regarding what, if any, changes should be made to the duties test, we did not propose any changes in the NPRM, and the final rule did not make any changes to the duties test. Now let's move to the duties test. Consistent with the previous regulations, employees meeting the executive exemption must be paid the salary amount set forth in the final rule and must meet the respective duties test for coverage. Let's begin our refresher for discussing the executive duties requirements. To satisfy the duties test for executive employees, the qualifying employee's primary duty must be management. They must direct the work of at least 2 full-time employees and must have authority for personal actions such as hiring, firing, and recommendation as to the hiring and firing must be given particular weight. Likewise, the duties test for the administrative exemption has not changed. The administrative exemption applies to employees engaged in office work, which is directly related to the business operations and have the autonomy to exercise discretion and independent judgment regarding significant matters as those impacting the organization's bottom line. Professional duties. These duty requirements for the professional exemption have also remained the same and apply to learned professionals, including scientists, physicians, as well as creative professionals such as musicians, artists, and writers. The duties test for learned professionals requires that the employee perform work that requires and has an advanced knowledge in the field of science or learning customarily acquired by a prolonged course of specialized intellectual instruction. Just like before, the exemption for learned professionals do not apply to occupations in which most employees acquire skill through experience rather than advanced specialized instructions. Computer-related occupations. The duties required to meet the computer employee exemption have not changed either. This exemption is still applicable to computer systems analysts, programmers, software engineers, and other similarly skilled workers in the computer field who meet certain tests regarding their job duties. However, as stated earlier, the new rule requires that these employees now either be paid a guaranteed salary of at least $684 per week or an hourly rate of not less than $27.63. Next, you will see our resource page. As it relates for additional information, the 2019 Overtime Final Rule webpage, as listed here in the first bullet. On that webpage are links to additional information such as a fact sheet of the final rule, FAQs, a link directly to the final rule as listed in the second bullet, a press release, and other compliance assistance documents. Additionally, the 17 series fact sheets have been updated and can be found on our website at the link provided in the third bullet. And now we will take additional questions, but before that, I would like to also remind you of our local wage hour offices who stand ready to assist you with compliance assistance as well and to answer any other questions that you would have related to 541, overtime, and any other provisions actually applied and enforced by the Wage Hour Division. And the district offices can be reached at 1-866-4-US-WAGE. That is 1-866-487-9243. And now we're able to answer questions that you might have.
Derek and Sarita, thank you so very much. We have received a bunch of questions. We'll try to group some of them together.
Okay.
And take 5 or so, maybe a little bit more time in that. A question or two about the highly compensated employees. Is it just the 107,000 and you're automatically in that category, or is there something more? As in, what's different about the duties tests for highly compensated?
Okay, one moment.
While he's looking that up, the slides will be made available. They'll be posted on our website as PDF, and there will be a message that comes to you right after this presentation is over, so that you can take a look at the slides and review the materials and watch the recording. Derek or Serena?
We just like to make sure we have the exact regulation site. So for 541.601 for highly compensated employees, and you're correct, it has to be at least the $107,432 annually. And what's required for this particular exception is that the employee must customarily and regularly perform one or more of the exempt duties or responsibilities of the EAP exemptions, the executive, administrative, or professional employees as identified in the respective sections of 541, 100, 200, and 300 section.
That's terrific. So it's a shorter set of duties that you have to satisfy. A couple of questions on the part-time exempt employees. How does it work if someone typically works 30 hours a week in terms of setting the salary?
Typically with salary as it relates to the employee for part-time, there are no additional requirements for part-time employees. The rule will apply to a part-time exempt employee if they met the respective Part 541 criteria regarding beginning on a paid salary basis at the required standard salary level, the weekly salary amount of $684, and meet the duties test. And typically, the salary requirement for the exemption would be for all hours worked. And wage hour typically does not look at a full-time or part-time status. We don't make that distinction, even though I do understand the question, but wage hour doesn't make that distinction. But it's for all hours worked. You're looking at the duties, you're looking at the salary, and at the work performed itself. And it's not prorated.
Right. Thank you. Let me ask Tiffany to flag a couple more of the questions that she's seen.
So we have a lot of questions about the overtime and time paid, like paid time off. So if someone takes paid time off, does that count into the 40 hours? And what if that person, say they work 35 hours, but then take 8 hours of paid time off that week? How does that play into determining the time?
Great question. With wage hour and with the FLSA requirement, it is for all hours worked that's determined for the overtime basis. So, for example, if you have an individual who is working who's paid for 43 hours, but they actually worked 35 hours, and 8 of those hours were vacation hours or PTO, that's not overtime for that work week, as only 35 hours were actually worked, and therefore the 8 hours would not constitute overtime payment. It would not be a requirement by the FLSA, but if an employer would like to be more liberal, and that's their decision, but that's not a requirement. Typically, in a similar situation or additional example, if a person has worked 35 hours in 1 week and 45 hours in the second week, every work week stands alone, and the 45, even though it totals 80 hours, that second week, 5 hours of overtime were worked, and 5 hours would have to be paid for overtime, even though the person is paid on a biweekly basis. And every work week stands alone.
What if a person is not authorized to work over 40 hours, but does so anyway?
Love that question, and I'm saying it as graciously as possible. I'll go back to my statement, our statement related to the hours actually worked. If a person actually worked 45 hours, were only authorized by 40, they might have not followed the employer's recommendations or policies, but the manner in which you address it from not following conditions of employment cannot be that the person isn't properly paid. They would still have to be paid overtime, but how you, HR, and others would handle not following rules and regulations would be left up to your own internal policies and procedures, but the payment itself would have to be made because hours were actually worked. It's called suffer or permit, even though I know that's very old language, but that's the requirement for hours worked.
Thank you. Tiffany, can we do one more? I think we are about to run out of time on this segment.
There's a couple questions about Ketchup. So do you have to tell the employees if you're using Ketchup, and can you continue to use the Ketchup provision, or is it only applicable in the first year?
I'm sorry, I need you to repeat that question one more time.
So do you need to tell the employees if you're going to use the Ketchup provision? And then when can you use the Ketchup provision? Can you use it in the future, or does it only apply if you're using it in the first year available?
Yeah, so I'm not going to say it only applies in the first year, but it applies in each year. So each 52-week period is going to stand alone, and after the end of that 52-week period, the very next pay period is when the catch-up payment would have to be paid. If it's not paid, then you can't pay it at a later date. Does that make sense?
I think that answers the question as best as we can for the time that we have, so thank you.
Okay.
Thank you so much, Derek and Serena. If you're welcome to stay as long as you can. I know you've got some other meetings and presentations, so we're eager to keep you on the line, but we understand if you do have to go. To those whose questions were not answered, we are noting them, and some of them will be covered by Jennifer and Kathy as we go forward. But please do keep asking, keep sending them in. We are now.
Thanks so much.
Yeah, definitely. Yeah. Thank you so much.
And it's delightful to have such dedicated public servants working for us and sharing with us. Thank you very, very much.
Definitely appreciate it.
We're now turning to the how portion of the program in terms of how do you make adjustments to ensure that we're legal. We're going to go through a number of topics. including common misperceptions about the law and as it affects nonprofits, answer some of your posted questions about nonprofit jobs and some of the new ones we've just seen, how the law applies, walk through the steps for auditing your HR practices to make sure everything is copacetic, and take a careful look at how state laws may be stronger and perhaps provide better rights and protections for employees, for nonprofit and other employees. So we're going to start. This is going to be the lightning round, just to get everybody fired up here. We at the National Council of Nonprofits have taken a relatively high profile during the overtime regulations, and we've received many calls from nonprofits assuming they are in perfect compliance with the law because they do one thing or another that might not be appropriate. So if I'd gotten my way in scheduling this program, this would have been a 3-hour presentation, and we would have polled everybody on the series of these 4 topics I'm about to bring up. But I didn't get my way, so we don't have time for that to check out the various practices and techniques. So the next best thing, might be better, is that we're turning to our panel of experts, Kathy Ruckelshaus and Jennifer Przemski, to respond. I'm going to put up there on the screen a technique or coping mechanism that we've heard some employers use. And I'd like for Kathy and Jennifer, we haven't practiced this, but we're going to ask you to kind of blurt out whether the approach is perfectly legal and appropriate or, oh, no, don't do that. Okay, you ready? Kathy and Jennifer, are you live?
Ready.
Live, ready to go.
Okay. The first topic, provide comp time, as in compensatory time. Can you do that?
This is Jennifer, and the answer would be no, you cannot. This is something that we see a lot in our practice, and while the FLSA allows public employers at the federal, state, or local levels to compensate, and we're talking about non-exempt employees here, for overtime hours worked with comp time instead of a cash overtime payment, private sector employers cannot offer comp time to non-exempt employees. And of course, private sector includes nonprofits. So you need to pay your non-exempt employees for all hours worked over 40, and you can't give them comp time in lieu of that payment. That said, that applies to non-exempt employees. The FLSA does allow private sector employers like nonprofits to offer comp time to their exempt employees as long as you're meeting the other requirements of the exemption and they're guaranteed that minimum threshold salary, and the comp time is just in addition to that.
Kathy, anything you want to add there?
Nope, she covered it.
Okay, next big topic. There we go. How about allowing people to volunteer after they do, if they're non-exempt employees, they're doing their job, and after 40 hours, they say, I want to volunteer. Or the manager says, hey, you're volunteering now. Is that okay? Kathy, why don't you lead off with that?
Okay, sure. No, you cannot. You can't, and this is probably going to come up again because I know we have another example of a misperception, but you can't change the label on your worker from employee to volunteer, employee to trainee, employee to independent contractor, and then suddenly not pay them pursuant to the law. So you can't do that. They can certainly volunteer, but you have to pay them. If they can work,
Thank you.
have to pay them.
This morning, driving in with my wife, she was talking about the thrift store that our organization runs. Can people volunteer after 40 hours? I said no. So that was pretty clear. Let's go to the next one. Can you switch to just turn somebody into an independent contractor so that you switch them from hourly or salary to something completely different? Jennifer, is that something that you encourage people to do?
Oh, that would be a resounding no. So while in theory it would be a great idea because independent contractors aren't covered by the Fair Labor Standards Act, you know, you just put the independent contractor label on them, then you don't have to pay overtime. But unfortunately, it's not permissible. And when we're talking about independent contractors, I think it might be helpful to the audience to address a couple misperceptions that I see on a regular basis when it comes to independent contractors. So number one, even if the worker tells you, hey, please classify me as an independent contractor, that doesn't mean necessarily that you can classify them as an independent contractor. Similarly, just because you have a written agreement stating the relationship is one of an independent contractor relationship, or even if you issue them a 1099, doesn't necessarily mean that you can classify them as an independent contractor. And finally, just because everybody else is doing it doesn't mean that it's proper to classify certain workers who are performing certain duties as an independent contractor as opposed to employee. There's a pretty prescriptive test. The bar is pretty high. Start with the presumption that the employee is indeed an employee. And then the DOL is going to apply what they call a 6-part balancing test. It's called the economic realities test to determine whether the worker is really in business for him or herself in order to have that independent contractor classification. And just to put a finer point on it, when it comes to independent contractor, you're not just dealing with the Department of Labor, you're also dealing with the Internal Revenue Service because it's a tax issue as well. And just because because you've previously classified a worker as an employee, it's probably highly unlikely that you're now going to be able to meet the balance of the economic realities test in order to reclassify that worker as an independent contractor.
Yeah, and this is Kathy. This is Kathy. I think Jennifer said it perfectly, but I just wanted to kind of lift up what she said, which is independent contractor means you're running your own business. So often, almost never is it going to be the case that one of your employees can suddenly become an independent contractor over the weekend if they're doing basically the same work.
Excellent point. Thank you. And Kathy, you addressed this sideways or a little bit before, but can you bump someone's title up to, say, vice president, just to assure you snag that executive exemption or something along those lines?
No, you can't. The duties test hasn't changed, and that's really the basis for most of these exemptions unless you don't meet the salary level. So labels or job titles aren't going to get you out of this.
While we're still on this slide, I just saw a good question. Flex time is another term, going back to that very first topic. Some people say flex time, some say comp time. I think of flex time as shifting within a week or otherwise. Do either of you have comments on the distinction of flex time versus comp time? Or are they the same thing?
I think it depends on how, it's difficult to answer because I'm not sure exactly how the flex time is being defined. If flex time is the same as comp time, meaning you're not paying the employee for the hours worked over 40 and you're giving them flex time, allowing them to use those hours at another time rather than paying them for it, that's going to be impermissible. If it is a matter of scheduling, let's say, you could, if you're dealing with a non-exempt employee, if you have them, work, Monday through Thursday, and they work 40 hours during that time period, you can, and you don't want them to incur the overtime, you could tell them to take that Friday off. So I'm not really sure. It's hard for me to answer the question specifically, but I'm hoping that gets to what the root of the question.
Thank you. And because the questions are flowing in, on the volunteering question, a lot of nonprofits have big events like a gala. Can staff volunteer to work the gala so they're not doing their usual job of social work or performing arts or something? Instead, they are running and getting running the coat check office or something like that. What are some considerations in that area as to when you can and can't allow volunteering?
This is Jennifer. I'm happy to kind of hop in on it. Volunteer, we could probably have a webinar on that topic alone for sure. But you just need to make sure, the answer is probably yes. You want to make sure that it is really voluntary and if they're not coerced in any way, right, and making them, or they're not receiving a benefit in order to volunteer. And you really want to make sure that the duties that they're performing are really not even related to the type of job duties that their regular job duties are. And you should probably be okay. But again, there's a pretty specific test. So generally it should be all right under those situations described.
Yeah, and this is Kathy. I would just add to that, oftentimes you can just recruit other volunteers for a gala from the outside. It's actually probably safer to not recruit from among your staff because it might feel involuntary. It might feel like it's sort of a forced, come on, you're going to volunteer for our gala. But if you just get students or other outside volunteers, if it's kind of a one-off event like a gala, then they typically could be considered volunteers.
Yeah,
Excellent advice.
Following up what Kathy said, I totally agree. I mean, if you do a general kind of notice to the general public in which, your employees may or may not, I totally agree. That is definitely safer that way.
Terrific. We spent a little more time there than planned because of some good questions that were coming in. Some questions that we've received either here at the National Council of Nonprofits or new questions that are coming up here that people have posted. We're going to go through them and highlight the types of things to consider when making a determination. And Kathy and Jennifer, I've kind of lost track of who's covering which, but the first one, how about an executive director at a two-person nonprofit? Is that person exempt even if not managing two or more people?
Jennifer, why don't you take these unless you kick it to me? Yeah.
Okay, sure. Yeah, absolutely. Okay, so Dave, in your example, you said that the executive director was not managing two or more employees, or they were. I'm sorry, they're not, right? Because they don't meet the executive exemption, right?
Two people total.
Got it. So they're likely not going to fall under the professional exemption the professional exemption, because that requires that advanced degree of and long course of learning, and they have to use it as their primary duty. So really, you're back to the fallback, the administrative exemption, which requires that exercise of discretion and independent judgment. An executive director who's running the organization, likely is going to be making those kind of key decisions. They're not really governed. They're advising, strategizing, managing, such that they're likely to fall under that the administrative exemption. But just remember that executive director also has to be paid on a salary basis and meet that new salary threshold.
Terrific. Thank you. And the trick on that question was the title is executive, but with not managing two or more people, the executive exempt duties aren't met, but the administrative probably is. Teacher, we had a lot of questions in this area, and we heard earlier, and we saw a slide earlier from Derek and Serena that teachers are exempt without regard to the salary level and salary basis test, and that's a statutory declaration, I believe. Does their exemption change if they're also performing executive, like if they're the principal who's doing teaching, or if administrative duties? And are there other factors for determining teacher, someone who's a full-time teacher at a parochial school? My understanding is that person would satisfy the professional test. But what about if other duties come in? How do those play in this calculation?
This is Kathy. There's a separate set of regulations for teachers, and they are treated a little differently. This new rule doesn't change anything, so if you're already operating under the law as far as you understand it, you should be okay. But teachers are pretty broadly exempt if their primary duty is teaching, tutoring, instructing, or lecturing to impart knowledge. And if they are performing that duty as an employee of an educational establishment. So that's super broad, and it includes sometimes even people like athletic coaches, adjunct professors, even postdocs can be considered exempt, sometimes teaching assistants. So it's pretty broad because of that specific exemption in the regulations. If the employee argues that their primary duty is not teaching, tutoring, or instructing, then they could potentially be covered, but it's much more difficult for educational employees to get coverage under overtime protections.
Thank you. Thanks for explaining that. That separate topic, this is a big one for a lot of nonprofits. Database manager is hugely important job for nonprofits to do fundraising. The title can be tricky. I suspect that in some cases, the person is actually managing the database. That's where the manager title comes from, rather than a team of colleagues. Any thoughts on when is a database manager an executive or professional, and when he or she would be considered a non-exempt? I'll use the old-fashioned term key punch operator, which is a non-exempt category and shows my age. Any thoughts in that area?
Sure. This is Jennifer, and I think you hit really on the main point. Just because you're calling somebody a manager doesn't necessarily elevate that or put them in the exempt category. So I do see this fairly often in the nonprofit world, and I think you really need to look to the primary duty. Just because they are touching a computer doesn't mean they're going to qualify for the computer professional exemption. That's a really high bar that a database manager, I've never seen one fall under the computer professional exemption. So likely you're back to that kind of catch-all if they're not managing anybody of the administrative exemption. Typically what I see in the database management is you're inputting data into your database and punching reports and things like that. Even though there is some discretion in exercising those duties, it's likely not going to be the discretion and independent judgment as viewed in the eyes of the Department of Labor, because that database manager is really following established procedures. And when you're following established procedures and kind of doing routine manual work, that's not going to rise to that level of discretion and independent judgment that's necessary to meet the administrative exemption.
Okay, thank you. Web designer, here's another one that's kind of where on the spectrum. Web designer and graphic artist. This looks like it's in the creative professional category, as to who may or may not be exempt. What factors should nonprofits look at drawing the line here?
Sure, this is Jennifer again. You really need to take a look to see, is the employee actually engaging in some kind of artwork? Is there creativity or invention involved in it in the primary job duties, or is this really somebody who's just is installing an art product that already exists? If they're installing that art product, that doesn't have the specialized skill that's required for the creative professional exemption, and thus they should be classified as a non-exempt employee.
Okay. One more. Administrators and social worker. A lot of questions about social worker. And one part is the person is a social worker, does the work of a social worker fit into the professional exemption? But in this case, someone, in the examples we've been hearing, someone is both an executive or administrator, as well as doing some work in the field. Same sort of question about how do you, in shaping the job, what are the factors you need to consider? Same sort of question as before.
Kathy, I'm going to go ahead and turn that one over to you.
Okay. I mean, yeah, I think it is what Jennifer's been saying. You have to look at both the main duties that the worker is doing and consider that these are narrow tests that the employer has to meet. So an executive has to customarily and regularly direct the work of 2 or more other employees and has to have authority around items of significance like hiring and firing or promotion. So it depends on what that worker's duties are. And then in the professional bucket, it's going to be a question as to whether or not getting a social work degree constitutes a prolonged course of specialized intellectual instruction. And if the person does have an advanced degree, you have to ask those questions. So I think it's, again, primary duties, and then are they going to fit within these relatively narrow definitions of what constitutes a professional or administrator.
Terrific, thank you. Now we've received a bunch of questions about specific job categories. rather than save these for the end, since we're talking about job duties, let me just throw out some, and then y'all can, I suspect the answer is the same for all of them. How much ongoing and extended training and independence, but I'll throw out, let me say a list of them. Therapists, ministers, family advocate, HR professionals. Any of those jump out at you as different from the comments you've been saying about the gauging multiple duties?
This is Jennifer. I mean, again, it's really each position is going to be really fact specific and deserves additional, individualized attention. So the title itself isn't enough. So you really need to look at that primary job duty to determine whether it meets one of those job duties tests, and of course meets the salary test as well.
Terrific. Thank you. Let's move on to the next category, which is how the heck do you get in compliance? Now we're going to, you've been hearing Jennifer, she's going to talk to us about the step-by-step process for kind of doing an HR audit. Jennifer, just tell me when to change the slide.
Okay, yeah, absolutely. So I think this is a really great time for all employers to take a look at their entire workforce's classifications. Sometimes I find that job duties kind of morph over time since the employer did the initial FLSA classification. So it's a really good idea to not just look at the salary levels, but also to make sure that all your exempt employees are meeting one of those job duties tests that we talked about. So again, look at each person, and in order to classify them as exempt, hit those three questions. And again, I'll just repeat them because they're important. Because you need to meet all three. The answer needs to be yes to all three of the questions. They need to be paid on a salary basis. Do they meet the new salary threshold? And do they meet one of the job duties tests? If you say yes to all three of those questions, then they get to be exempt. Okay, so let's assume everybody that you classified as exempt meets one of the job duties tests. So then we're just left with the salary. So now you've kind of got this bucket of employees maybe who no longer meet that new salary threshold of the $684 per week. So you have a couple of choices about how you want to come in compliance. Now the easiest fix, and probably everybody already knows this, is just go ahead and bump up their new salary, their salary to the new threshold of $35,568 per year, and then you get to keep them classified as exempt, right? That's the easy fix. But maybe some of you don't want to incur that financial liability or not in the position to do that. So you can go ahead and reclassify them as non-exempt. So we can go to the next slide then. So if you're reclassifying them as non-exempt, you have some options on how to pay the employee, and here's where kind of the fun, more complicated stuff comes in. So you can go ahead and say, all right, I'm going to, now they're paid a salary, but that salary equates to an hourly rate. So you can continue paying them at that hourly rate, and then just pay them time and 1/2 for any hours worked over 40. That's one way to do it. However, if the employee works more than 40 hours in a work week on a frequent basis, instead of keeping their current hourly rate, you may want to go ahead and convert the employee's salary to the equivalent hourly rate so the financial impact of the new regulations are minimized. So if you want to do that, and that is converting that current salary to the equivalent hourly rate, here's the steps that you want to do. You want to look at each employee and estimate how many hours they're working in a work week. You can talk to their supervisor, you can talk to them if you want to, and just get a good estimate on that. If the employee is working fewer than 40 hours per week, all you need to do is to divide their current salary by the number of hours worked, and that's going to be their new hourly rate. If the employee does more than 40 hours in a work week, it becomes a little more complicated, so I'll say this slowly. The new hourly rate is going to be their current salary divided by the sum of 40 plus the number of overtime hours worked multiplied by 0.5, and that's how you're going to get that new hourly rate equivalent for those folks. Some of you may not want to deal with the hourly basis and doing the conversion, and quite frankly, sometimes that is, you have to manage the employee relations perspective there, and employees don't always like that. So what you can do is classify them as non-exempt employees, but you go ahead and pay them on a fixed salary and continue paying them their fixed salary. And then when they work anything more than 40 hours in a work week, then you just go ahead and pay them time and a half at their regular rate of pay. But when you do that, when you're paying somebody on that fixed salary, just understand that because they're being paid on they're a salary non-exempt employee, you're going to be paying them that salary even if they work less than that 40 hours per week or whatever your regular work week is. And in addition, you need to remember, even if you're doing this fixed salary method that I was discussing, they're still non-exempt employees, so you still need to track their hours. Just because you're paying them a fixed salary doesn't get you out of that requirement, again, because they are going to be non-exempt employees, even though they're being paid a salary. There's a couple other methods. I don't think we probably have time. We're really running at the end here. So there's a couple of other methods, but I'll leave you there. So let's say you've decided not to bump up the employee salary to the new threshold. You're going to maintain, in order to maintain their exempt status, you reclassify them as non-exempt, but you want to make sure that the employee doesn't work more than 40 hours a week. So there's a couple of options here. Number one is pretty obvious. Just don't schedule the employee to work more than 40 hours a week. And there was that question earlier that said, you know, if an employee goes against policy and works more than 40 hours a week, do I have to pay them? The answer is yes. However, you can put in your policy you have to obtain written permission from your supervisor for working more than 40 hours per week. And, you know, if it really push comes to shove, you can actually discipline them for violating the policy, even though you have to pay them for those hours worked. And then you certainly can train your supervisors to help them understand how they can manage employees and not require them to work more than 40 hours a week. You can also adjust the work week. You can also realign job duties amongst exempt and non-exempt employees. So again, that may cause some issues from the employee relations perspective, but one way to do it is to take those tasks that take longer, take them out of the non-exempt employee's job description and give them to an exempt employee, because of course your exempt employee is paid the same salary regardless of the number of hours that they work. Now granted, I recognize that that's not ideal from the employee relations perspective, because you're asking an exempt employee to perform more work, and probably they're going to want to be compensated, but that is an option. Changing the work week is pretty complicated, but essentially, depending on when the overtime is worked, you could adjust the work week, meaning it doesn't have to run on your standard Sunday through Saturday basis. You could adjust that so they don't incur overtime. And then finally, although, you know, we did talk about not reclassifying your current employees as independent contractors to avoid paying overtime, you may want to consider you know, outsourcing certain functions to other vendors who have established businesses who deal with maybe HR or accounting. That could actually reduce costs, so you wouldn't have employees, you would outsource those functions. And then finally, again, I know I'm running over, so after you make the determination regarding the employees who are being affected by the new regs and any changes that you're making, it's just best practice to communicate all of this in writing to them. You have a record of what's going on, and it avoids confusion. I like letters and some kind of written communication, explain if there's any compensation change, explain the classification change, explain the effective date, and if there's been a change of job duties at all or job restructuring, make sure you have a new job description with that. And remember, if the employee is non-exempt, you need to make sure you are tracking their hours.
So communicate the HR gospel?
Yes, that's
okay.
the plan, to keep that record. Yes, thank you.
Right. Thank you. We're going to turn to questions in a moment, but we're now on my favorite topic, and I learned this from National Employment Law Project about the impact of state laws. People frequently are surprised to learn that the Fair Labor Standards Act, the federal law, is not the final word on wage and hour across the country. Kathy, would you please explain this in the context of the overtime rule?
Sure. And this probably shouldn't be a surprise to you all on the phone, on the call, because again, this is nothing new, but employers have to comply with the higher labor standard or the more protective labor standard. So if you're in a state that has, for instance, higher minimum wage, you have to pay that minimum wage and not the 725 federal law. And if your state has different salary thresholds or different rules that are more protective for workers, you have to comply with those. So again, this is nothing new. We have up on the screen some states that either already have higher salary level thresholds than the federal. New York and California for years have had higher levels, so that if your workers are making below that level, you can't treat them as exempt. But now newer ones are coming in Pennsylvania and Washington state. There's some proposals in Colorado, Maine, Massachusetts, and Michigan that have not yet passed, but there's some proposals, and these are all mostly in response to the Obama overtime rules that were enjoined by at least one Texas court. So again, California, New York, the thresholds have been around for a while. These other states, Pennsylvania, Washington, Colorado, Maine, Mass, and Michigan, are newer proposals or enactments. And then again, this isn't new, but California has an 8-hour day. So if you have workers who are covered by overtime in California and they work more than 8 hours in a day, you have to pay them overtime. Colorado has a 12-hour overtime day, which are on top of the 40-hour work week limits under federal law. Some states have different duties tests. Most of them follow pretty closely to the federal rules, but you have to check your state law.
I'm sorry, I was muted. Thank you, Kathy. Things are very much in flux. We're seeing lots of minimum wage proposals, and as you saw on the screen, the several dealing with the salary level. So this is an area that's ripe for state engagement. So those of you all over the country, you can look to Washington, but you need to also pay attention to what's going on in your own community. Do we have more questions? I've been reading the slides and listening carefully, and I'm hoping Tiffany has been keeping track and is ready to throw out some more questions.
We've had over 110 questions, so sorry if we don't get to everyone's, but we are going to try to combine some to cover some of the big topics. A lot of these questions are logistical. So first off, if you are a highly compensated employee, do they now need to be raised from the $100,000 standard to the $107,432 under the final rule?
Yes, they're not going. I mean, the new rule is going to come out, so you have the $100,000 isn't going to be enough anymore. So yes, the test that you apply for highly compensated employees, it would need to be bumped up to that new number.
To determine the amount of time, can you use the calendar year, or could you also use your fiscal year to determine the salary threshold? Does it matter, I guess is the question, whether you're working off of the calendar year or fiscal year?
It's more it really is more of the weekly so look at the make sure they're being paid the $684, right? I don't know, Kathy, I don't think it matters. I don't think it's the year. I mean, it's just annual. The 684 is just annualized to the,
Right.
the new number.
Yeah, and you can't, I mean, as in other areas of the wage and hour law, you can't try to move that around or manipulate that, just as employers can't manipulate the work week. They can't manipulate the annual salary by trying to, change it by using certain months in one year and another month in the other. It has to be established and then use the same thing.
There were a couple questions about transferring the structure, so going from calling the employee exempt to now classifying them as non-exempt. Can you do that, and can you do that even if the employee meets the duties test? So going strictly from already a non-exempt, or already exempt to now a non-exempt.
I think the question is, are you required to treat them as exempt if they satisfy the exemptions, the duties tests?
No, you can opt to treat them as non-exempt if you'd like, and then you can, if you'd like to treat, because the presumption is they're covered by FLSA and they're non-exempt unless they meet an exemption. So you're not forced to treat them as exempt.
Do exempt employees have to have their time tracked?
No, well, because they're not covered by the Fair Labor Standards Act, they don't have to. And sometimes there are, and quite frankly, as a best practice, unless there's a business need to track exempt employees' time, you really shouldn't do it because it has the appearance that you're treating them like non-exempt employees.
And how does this apply to interns and employees that are in training, like new employees?
These are categories like volunteers that, like Jennifer said, we could have a whole separate webinar just on these categories. But typically, again, the label doesn't matter. So it doesn't matter what their title is or what you're calling them. It matters what they're doing. And most workers are supposed to be paid, including paid overtime for any hours worked over 40. So you would have to look at the Department of Labor tests for trainees. There's a separate 6-part test, I think it is. And then interns are really tricky. There's a lot of case law now, and more interns are suing for minimum wage and overtime, although for nonprofits it's easier. So I would err on the side of paying them, especially if you have a lot of them doing work that's pretty integrated into the work of your nonprofit. And trainees are even harder to not pay. Jennifer, I don't know if you have thoughts on this.
I agree with you on both, particularly the intern. I mean, typically I will say that almost always training time really needs to be compensated. Like you said, there's a certain section that you can look at, but in my experience, typically the training time needs to be compensated. With regard to the interns, the label doesn't matter. There is a test by the Department of Labor. You can find that on their website, and it is a really high bar. Usually it requires, the intern has to be the primary beneficiary of the relationship, and in order to safeguard, as a better best practice, and to make sure we're comfortable with not paying the intern, we would want it to they would be receiving academic credit for it. It would run with the academic year. It would be clear that they're not expecting compensation, and really, and what Kathy said, I just want to put a finer point on it. You really shouldn't be hiring an intern to supplement your workforce, right? It should be an educational opportunity in order to be an unpaid intern.
Thank you. I've just seen a question that I'm interrupting to ask. What if many people have virtual employees? Let's say your employee is Kathy, working in New York as let's say a vice president working in New York City for an organization based in Washington, D.C. So Washington, D.C. uses the the federal standard. New York has a higher salary level. So the employee is working in New York for an organization in D.C. Which standard applies?
This is Kathy. I mean, Jennifer, you could add in, but typically the worker can get the more protective protection. So if the worker's here in New York, and even though the employer's in DC, the worker would be covered by New York law, there's some kind of, case law about whether or not you have enough nexus in that. So if the worker is virtual or remote and moves around a lot, the employer could argue that they're not covered by that New York state law, but it's much safer to just cover them where they're working.
Jennifer, final word on that topic?
Agree.
Okay.
It is more challenging with the remote workforce, but yes, if the employee is working from their home in New York, then wage and hour law would apply. I mean, you would check the case law there, depending on even whether DC law could apply, but I mean, it would be New York.
Thank you. We are out of time except for us to say thank you so much for participating. I see Serena is still on the line. Thank you to Serena as well. Kathy or Jennifer, do you have a closing bit of advice, or you can just say so long, advice to nonprofits who are looking into this, who may have just been exposed to the surface and have lots of questions? Any advice for proceeding? Okay, I threw a curveball at you, sorry.
No, this is Jennifer. I think just take your time. You have about 2 months here to make sure you're in compliance. Re-examine your classifications and just kind of go through the steps. And there's a lot of good information. We've done the webinar today, and there's a lot of good information online about how to handle the reclassification issues and payment of non-exempt employees. So definitely take advantage of those.
Yeah, and this is Kathy, I would just add that a lot of this is not new. So if you've been operating and not getting any feedback or pushback or enforcement actions or claims, you may be just fine. It's really the salary level that's the big change from this rule. So the other piece of advice is not to panic.
Excellent advice from both of you. We have discovered that not all nonprofits recognize or have been aware of some of the nuances of the Fair Labor Standards Act. That's why we wanted to do this presentation. The change in the salary level and the new overtime rule is not as dramatic as before, and not as many nonprofits are being caught off guard by that, but they are discovering things, as we talked, comp time, or allowing volunteers. There are a lot of practices that might be existing in the nonprofit community. Our purpose here was to promote full and honorable compliance. I think we've surfaced some excellent questions, and Rick Cohen, let me turn it over to you to explain folks what happens next.
Great. Thank you, David, and thank you, everybody, for being a part of the webinar this afternoon. As we've mentioned a couple of times, we will be sharing a copy of the recording as well as the slides from the recording with you in the coming days. So keep an eye on your email box for that. If you don't end up seeing it, please check your spam box. We understand that some of the content, the login information ended up in some spam folders, so keep an eye there. And if you don't receive it, don't hesitate to reach out. We want to make sure you all have this information to refer to, and please don't hesitate to share it with others in the nonprofit community who might benefit from that information. So David, let me turn it back to you to close us out.
The closeout is to say thank you for participating. Thank you for the very great questions. People submitted over 100, I hear. And thank you to Derek and Serena for giving the Department of Labor perspective. Kathy and Jennifer, you went long. You put some good thought into it. You gave some superb advice. And I know everyone is more comfortable as they're ready to step in and learn more. Thank you for your time, for donating your time to the nonprofit community. We greatly appreciate it. If we could do a round of applause, we would, but just take our word for it. Everyone's standing up cheering. Thanks everyone.